Good evening, guys. It's Saturday, December 17th. My name is Dave Coker, and this is Talking About Finance. So good evening. My friends, it's been too long since I've been able to spend time with you, my people, men and women, investors all, who believe in the power of buy and hold, but we take it one step further to a higher level. Because with few exceptions, we only buy assets that pay us to hold them. So we're talking about dividend-paying stocks, exchange-traded funds, rental property, and even an asset class I haven't talked about much, which I'm active in though, intellectual property rights. We buy and hold, we never sell because we're getting paid to hold these assets. And we're just not getting paid someday, we're getting paid now, we're getting paid today to hold these assets because we know $1 in our hands now is much more powerful than the promise of $1 in the future, or mañana, as we used to call it in New York. Well, my friends, mañana never comes. So we want to get paid now. Okay, guys, I've had COVID and then I've had a cold, so places to go, people to see, things to do, no time to waste. Let's go to the land of money, the kingdom of wealth, together. Last week, the S&P 500 was down about 2.08% on the week. You can see only one sector traded up, energy. There were four other sectors above the S&P 500's close, but if you were holding these sectors, you lost money, more than likely. The S&P 500 is now down about 19% year to date. I guess Santa Claus ain't coming this year. The VIX traded down to 2262. It started the week at 25, so nice drop. But be careful out there, guys. Make sure you're getting paid for holding stocks. The 10-year note closed the week at 3.49%. It's down about 0.1% week on week, up about 1.9% year to date. Oil closed the week at 74.28, up about 4.6% week on week, and down about 1.2% year to date. Oh wow, we've got a really cold night here in the UK. But as I tell folks, where I come from, rural New York State, a teeming metropolis of 40 people close to the Canadian border, this would be a balmy spring day. So it's all right. Saturday night in Essex is a go. We went to a pub for a late afternoon lunch. Then we went to a specialist chocolate shop one town over. Lots of people out and about, even though there's a train strike. So the night is young. We're going to record this video and do a little more content creation before we head out again. More pints is what we need. And you know the routine by now, 7 slides for 7 days. What me and my buddies, about 50, 60 investment bankers, ex-investment bankers, money people, are all talking about on a private Telegram channel. I bring the best to you, which means what I like the best. And remember our customer service promise. If you don't like this stuff, we hate you. So let's go. All right, guys, let's get a look at this. Everybody's looking for a side hustle these days. This guy had a surprisingly easy side hustle. Really funny story. Managed to cash in about $122 million from these big tech companies. Facebook and Google were named in the headline, but there are a bunch more. All he did was send fake invoices. Now, the way this guy got caught, I don't want you to think I'm trying to prep you for being a criminal or anything, but it was really interesting the way these companies, Facebook and Google included, would pay $1 to $5 million, no questions asked. And what happened was this guy got a little greedy, and I don't know, maybe it was part of his exit scam. He sent a $25 million invoice to Google, and they started asking questions, started noticing they paid other invoices, and they said, hey, what's going on here? So yeah, he's been busted. That's really dumb. But speaking of dumb, I can show you something that's dumber, even dumber. Now, I have no idea who this guy is, and we were talking about on the Telegram channel, who in God's name is this, right? You don't want debt. Debt is a nasty thing to have in your life. So this guy's just read some stuff about how the, quote, rich live and how the, quote, the rich use debt for their power. No way. Don't do it. Get rid of that mortgage. Get rid of that car loan. Just pay it all off. This is total garbage what this guy's saying here. And I'm actually sort of offended that somebody would try to come across as some type of financial planner and actually encourage you to take debt on. Now, I don't take any pleasure in this, but let me tell you a story. Before the global financial crisis, I've been against debt all my life. Before the financial crisis, I had 2 family members when they learned I paid cash for my flat in London's East End, £115,000. When they heard that, I got lectured from them about how I'm not using debt responsibly and debt could do so much more. I was like, dude, I'm the investment banker. I've got the advanced education in finance. Who are you? I don't really get down like that with family members, but I was just thinking, what in God's name is this stupidity? And sure enough, 2 of those people lost their homes in the global financial crisis. Why? They had debt. It's really simple. So no, you don't want debt. Oh, here's a really good one. Now, I actually like some of Peter Schiff's stuff. He talks about gold a lot. Yeah, I dig Peter's stuff that way. He talks about Bitcoin a lot. Not so good. But he had some good insight here about 2018. And remember, that's when we had the taper tantrum. And remember, guys, at that point, the markets went south in a major way. And yes, Peter's absolutely correct. Q1 of the next year, they started weakening, started loosening interest rates again, started lowering rates. So it'll be really interesting to see exactly what happens. Now, this is his idea about how we might be moving into a situation like 2018. But then somebody posted this on Wall Street Silver, on Reddit. And of course, we were talking about, this is good for about 4 or 5 days of chatter. Yeah, this is really interesting. It's a little spooky when the correlation is quite so high. When you start to see these things, which way is it going? I don't really know, and I don't really care, because I only buy dividend-paying stocks. So I just sort of sit back and watch the fun. And yeah, sure, if it burns off some more, another 100 points or so, the S&P, who cares? I don't really care, to be totally honest with you. It'll be interesting to see exactly what happens. Here's something I did for my banking clients. I'm working it into a Medium article, so just hang on there. Now, we know that there's something called tax loss harvesting, which means in the end of the year, as the end of the U.S. tax year approaches December 31st, you sell losing positions because you can use those capital losses once you've captured them to shield a percentage of capital gains on the other side. So yeah, I do this stuff too. I don't have tech stocks, but even though I have dividend-paying stocks, sometimes they move into the red. And I will, if I have a stock that's very, very high, it's really appreciated a lot, and I want to rebalance my portfolio because I'm getting nervous, and I've got a couple that have really spiked up in value. I've got one in particular that has some losses. And remember, guys, I just don't buy once. I tend to move in and buy weekly, or probably buy monthly of these stocks when I buy them. I tend to focus on one. So my positions are typically made up of, dozens of individual trades over many, many months. And I've got one right now where I've got some losing trades in those positions. And I've got 2, as I mentioned to you, 2 positions where I've gotten huge capital gains, up about 100% on one. And I don't like to sell stocks when I'm making money, but I just get nervous. I think, my God, you put all that money into that stock and it's up 100%. And if it goes back down even to where you bought it, you've lost this money. You never realized that gain and deployed it into additional cash flow generating shares of another company. So yeah, I tend to do this. So we've got these stocks here down from 43% to over 64%. Some of these are solid companies. They're just getting caught up in end-of-year tax loss harvesting and maybe their own drama, like Meta. I wouldn't go near that piece of garbage. Intel, fine company. Amazon even. Yeah, this is a relatively, it looks like an extreme drawdown. It's not. Amazon's been down. I've got a chart someplace. Been down 90% before and bounced back. So some of these companies are very solid. Do your own due diligence. I'm not telling you what I'm buying. Actually, I will tell you what I'm not buying. I'm not buying any of this garbage because it doesn't pay a dividend. So think about that. That might be of interest to you guys. It might be something that you could play into and make some money on. Oh, and this is a really good one right now. CZ. I don't know what's up with him. We're seeing huge capital outflows from Binance. And he said this in a Spaces session. I wish I was in that one. I would have asked him to quantify this. Where did you get the data that says 99% of people who self-custody in hardware wallets lose their crypto? I don't believe you, CZ. You're making stuff up. In other words, you're talking your book. You want people to let you hold their crypto. And the problem I got with that is You ain't got no insurance. You ain't got no FDCI insurance like a bank would. So if your fund or your structure, whatever it's called, Binance, however it's implemented, right? If that company went under, it would just be like FTX. I'm sorry, we would end up as unsecured creditors. Ain't gonna do it, CZ, sorry. And here we go. This is a beautiful one from Plan B. And once again, I think you know how his charts work. The greens mean consolidation and we're moving up. And Plan B says we're currently in a consolidation period. You can see on the right-hand side of the chart. In other words, we've had our good run up. We've sold off. Might be a little bit more downside, but we're consolidating. We're forming a base. And according to Plan B, lift off. Keep the faith, guys. The halving is coming in May of 2024. And once again, these peak periods correspond with halvings. I still buy Bitcoin every Friday. I buy Bitcoin and Ripple actually every Friday. Ripple's a completely different trip. Bitcoin I've been buying for years. Ripple about 18 months, 14 months I think. Been buying Ripple every week. Doesn't really matter. Just buy and hold. Just put whatever money you can into Bitcoin, money you don't need for the next lifetime. That's the best way to do it. Put the money into Bitcoin. Just forget you put the money into Bitcoin. Sit back and hopefully we'll see a gap up. I'm only buying Bitcoin every week for one reason, guys. I know in the future it will be worth more than it is now. That's it, guys. Have a wonderful week. It's going to be really profitable. Got some good sessions coming up to close out the year. And then, of course, we're moving into 2023. Check out my Medium article. It's based upon some research I did called Stocks in 2023, Dip Then Rip. And I don't mean RIP as in rest in peace. I mean rip, like to the moon rip. Take care, guys.